Welcome back to another Trade Alts tutorial. This is the introduction to trading Ichimoku Cloud beginner series volume 1. So there's going to be quite a few videos after this, definitely a few more beginner series level stuff before we get into the advanced series. But I'm basically going to do my absolute best to take it slow, walk you through everything important when it comes to trading Ichimoku, and give you a few live examples at the end. But this video is all about preparing you to be able to use Ichimoku when it comes to your trading. So that's what we're going to focus on. Let's get to the video. All right, so let's get started. So what is Ichimoku? What does it mean? So Ichimoku Kinko Hyo, it translates to one glance equilibrium chart, basically telling you that, within a few moments, any chart that you look at, you're going to be able to decipher whether it's bearish or bullish very quickly. So I will say when it comes to my trading and scrolling through dozens and dozens and dozens of charts a day, Ichimoku really helps me to decide whether something is bearish or bullish and be able to instantly formulate a trading plan very quickly, and in a lot of senses, much quicker than other trading methods that I have used. So we'll get into that more in the video, but that is what Ichimoku Kinko Hyo means. And so here are the Ichimoku settings that I use. Two different ones really for traditional markets. So if I'm trading stocks, I really like to use the standard one. And if I'm trading crypto, I really use the double one quite a bit, and the settings are there. So for standard, it's 9, 26, 52, 26. And those are the ones, when you load your Ichimoku indicator onto TradingView, especially the one that's built into TradingView, it's going to come preloaded with the standard settings. And there's nothing wrong with the standard settings. I prefer the doubled crypto settings that are listed below. So 20, 60, 120, 30. And the real reason why I really like the doubled crypto settings is it helps to smooth the signals out. It smooths the indicator out, and it helps me take better trades. So there's less false positives a lot of times when you're using the doubled settings. Now the downside to that is you're going to get signals later a lot of times. So you're not going to be catching tops or bottoms for the most part, but it does help you. It does help you take better quality trades, I would say. So again, when it comes to crypto, I'm interested in the double settings. That's what you're going to see for all my charts. But here and there for stocks, you'll see me use the standard settings. All right, so it's time to get into it. So the first thing we're going to talk about is the Tenkan-sen. I refer to it as the Tenkan just to keep things nice, easy, and simple for myself, but it is called the Tenkan-sen. And basically it's the signal line. So it helps kind of give you an idea of equilibrium. It helps give you an idea of support and resistance. I don't really use this support and resistance. There's certain instances which I will show you later on when I get to the live examples. When things are really, really bullish or really, really bearish, a lot of times you can take trades based off of the Tenkan-sen, but I really prefer the Kijun trades, which I'll speak about later. But again, so Tenkan, basically, one of the things that you can look at as well is when the Tenkan-sen is flat, then it signals weak momentum. You look at the angles of the Tenkan is really important, or the slope. So if it's angled to the upside, it's indicating bullish momentum. If it's angled to the downside, it's indicating bearish momentum. You can use it as a stop loss. I don't particularly like to do that, but you certainly could, especially if you wanted to, if you're in a really, really, really good trade and you want to lock in as much profit as you can. You can use it as a stop loss area. I don't typically like to do that. But in this example that you're looking at here, your Tenkan-sen is the blue line. So it's represented by the blue line here on this chart. So how do you calculate the Tenkan-sen? Now, I would say it's not super important that you remember all of the calculations for Ichimoku, but I think, I really want to make sure that you know as much about it as possible. So I included it in here, but it's pretty simple. So for standard settings, right? And I'm going to go through both settings because some people might want to use standard. Some people might want to use the doubled settings that I'm using, especially for people in Discord who are following along with my trades. I'm assuming you're probably going to want to use the same settings as me, But for every example that I give you, I am going to give you the calculations for both the standard settings and the double settings, just so you know, again, whichever one you decide you want to use, or some variation of it, at least you know how it's calculated. So anyway, so the standard settings, you take the highest high and the lowest low of the previous 9 periods, okay, or 9 candles, and then you divide that by 2. So that's how you get your Tenkan-sen. It's literally the last 9 periods divided by 2 of the highest high and the highest low. For the double settings, it's the same thing. You take the highest high and the lowest low, and I'm talking about price, so wicks included. So you take the highest high and the lowest low of the previous 20 periods, because you're using the double settings, then you divide that by 2, and that is your Tenkan-sen. So that's how all these, the different little movements that you see here, it's literally calculating previous price, the highest high and the lowest low divided by 2. That's right where this blue line will always be. Okay, and on to the Kijun-sen, or the Kijun for short. It's a really crucial level. I think it's one of the most important parts about Ichimoku. It's really a whole system, obviously, but I think the Kijun-sen is very important. It basically illustrates midterm support and resistance. It's a slower moving average than the Tenkan, so it's not going to, you're not going to see as much movement, I guess you could say. Like, it can stay flat for quite a while depending on trend, because it is a slower moving average essentially. But the Kijun is a phenomenal opportunity. You can see right here in this chart, actually, like what I'm talking about. This is a really good example where you see these green arrows, but it's a really great area for compounding your position. So if you're long or short, so basically in this instance here, this is obviously going to be, this is bullish. So you're going to be compounding, or you don't have to, but I'm just saying you could compound your position where these green arrows are phenomenal opportunities, but because it is the mean reversion target. So anytime you have price moving away, like you see here, so price is increasing and it's moving further and further away from this yellow line, a lot of times, and that kind of signals, especially when you have a big deviation from your Tenkan and your Kijun. So when the lines get far apart from each other, because they really like to be close together. Like you see how they're angled right here, and they're going, price is moving to the upside. They're nice and close to each other. Then you start to see them get, they flatten out, they get far away from each other. You're often looking for the mean reversion, which you got. These are 3 really nice instances here. Technically, I guess this kind of counts as 1 mean reversion, but still you get the idea. So anyway, when price is way far away from Kijun here, like it is, you can kind of say that this is overbought, and you're looking for this mean reversion. Really nice buy opportunity there. So how you calculate the Kijun is for standard settings, you take the highest high again and the lowest low of the previous 26 periods, then divide that by 2. So that's your standard settings. Now for your double settings, you're going to take the highest high and the lowest low of the previous 60 periods or 60 candles, then divide that by 2. So that's how you get your yellow line, or the Kijun-sen. And then your Senkou span A. So, or you can also call it leading span. You'll see it in some indicators, or, some people call it the leading span, but the Senkou span A in uptrends, the Senkou span A will be the top of the cloud. So it's this green line here that you see. So this green line right here, that's the top of the cloud. So this is bullish cloud. Senkou span A is on the top. In downtrends though, the Senkou span A will be the bottom of the cloud. So that's how you know if your cloud is bearish, then the Senkou span A will be in the bottom. How do you calculate the Senkou span A? So for standard settings, you take the Tenkan plus the Kijun divided by 2. So it's the average of the Tenkan and the Kijun, and then you shift that 26 periods ahead, which will give you future support and resistance levels. So that's what I love about Ichimoku. Time is a really big component of Ichimoku, and it helps to forecast future support and resistance levels. So that is, like, when it comes to trading, really amazing stuff, and it kind of helps give you an idea of what's coming up. And we'll take a look at that in the later in the live settings when I go to the chart, because I kind of cut it off here. You can see that it actually forecasts out. So for the double settings, same thing. The Tenkan plus the Kijun divided by 2, so you get the average of that. But that's shifted 30 periods ahead, which will give you future support and resistance levels as well. and Senkou span B. So it's basically the opposite of Senkou span A to a degree, just by, you know, as far as the cloud goes. So in an uptrend, Senkou span B will be on the bottom of the cloud. So it's basically the opposite. And in a downtrend, Senkou span B will be the top of the cloud. How do you calculate Senkou span B? So it's for standard settings, it's the highest high and the lowest low for the past 52 periods divided by 2. You take that value and you push it ahead 26 periods. So no matter what, for Senkou span A and Senkou span B, whatever the values that are calculated, which form your cloud, they both get calculated differently, but at the end of the day, they both get pushed out the same periods in front of you, if that makes sense. So the calculations are different, which is why you have, you know, these different levels here. So Senkou span A, Senkou span B, but they're both forecasted out the exact same amount of periods. For your doubled settings, the highest high and the lowest low divided by 2 for the past 120 periods. Now that value is pushed out 30 periods ahead. And here is the Chikou span. So you notice I say intro to Chikou span. This part of Ichimoku is really deserves its own video, which it's to give you a hint. There will be a specific video based just on Chikou span. But the short of it is you want Chikou span to be above or below price, not inside of price. So Chikou span where it is in relation to price, that's what you're looking for. So the Chikou span is this purple line, in case you're wondering here. If you're inside of price, which you can kind of see right here, right? The purple line kind of comes and it's kind of messing around inside of price right here for the most part. That means that we're in a range. And there's really no trade of interest when you have price or when you have the Chikou span inside of price. I will say, like, the Chikou span itself is so underrated and it's really underutilized when it comes to Ichimoku. I really don't see very many people that use Ichimoku talking about the Chikou span. And I think it's pretty important. It's phenomenal for finding support and resistance levels. So when you're first starting out trading and you want to, you know, like when you're learning about support and resistance, when it comes to Ichimoku Cloud, you really can just look for where the Chikou span is and where you get a lot of touches, which I'll show you again. It's much easier to see in the live example coming up. But when you have these peaks, rejections, you know, and it's all around the same level right here, that's a really nice support resistance line. So how do you calculate the Chikou span? So for standard settings, it's the current price. And the Chikou span, by the way, so this calculated based on closing prices. So the standard settings, current price shifted back 26 periods. So this is a lagging indicator. You're literally taking price today and you shift it back 26 periods in history. And you're using Chikou span to find support and resistance as well. So this is pretty crazy. That's why I say it really deserves its own video. But that's for standard settings. And then for double settings, its current price shifted back 30 periods. All right, so the Kumo, which is the cloud part of Ichimoku. Some important things to remember. That when price is inside of the Kumo, it's not really a great zone to trade, except there's a specific type of setup which I absolutely love to take. But for the most part, I really don't like to trade when price is inside of cloud, as it can be a really choppy area to trade. So the thick clouds, so when clouds are really wide, when they're really thick, it shows strong support and resistance levels. So basically your Senkou span A, your Senkou span B, whatever those levels are, especially when they're flat. So you'll see flat like here. So here on this chart, you actually see these flatten out. Now obviously like price doesn't come down to it, but if it did, this to me would signify like strong support resistance levels. So I would be very interested in looking at potential trades if price happened to come down to these types of levels. This is kind of what you're looking for. So flat clouds, again, they can be a magnet for price and demonstrate really strong support resistance levels. I'm always trying to be aware of where those types of clouds are. So calculating it, it's very simple. The area between Senkou span A, which is this green line going up, and Senkou span B, which is your red line here, everything that's shaded in here that's green is your cloud. So for me, for my settings, I like to make bullish clouds. So this is a bullish cloud. I like to shade those in green And for my bearish clouds, I like to shade in red. Obviously, you can change a cloud to whatever color that you would like, but that's just what this means on my chart. So this is your Kumo, this green shaded area. All right, so moving on to the Kumo Twist. This is a really important part of Ichimoku. So bullish Kumo twists occur when Senkou span A bullishly crosses Senkou span B. So that's what gets, that's what flips the cloud to be bullish. In this specific example that you're looking at is actually a bearish Kumo twist. And that happens when Senkou span A bearishly crosses Senkou span B. So you can see your green Senkou span A up here, and it bearishly crosses your red Senkou span B. So you see this area right here in particular, right where my circle is pointing, that twist right there where it flips and Senkou span B becomes the top part of your cloud and Senkou span A becomes the bottom part of your cloud. This region right here is called your Kumo twist. Very important. So this is a really important thing to discuss. So which time frame is preferred? Now, I mean, Ichimoku technically works. You can trade it on any time frame. The issue or the trouble, if you get on too small of time frames, it might be difficult, especially if you're new, to recognize when ranges start forming, like mini ranges start forming on those low time frames. And I think you could get quite a bit of false positives or false signals that might lead to, some issues. For me, how I like to use Ichimoku is very much from a swing trader's perspective. I like kind of higher time frames for it. The minimum that I really kind of entertain, and this is a personal preference, again, like you can find whatever time frame works for you, the type of time frame that you want to trade on, but I really don't like to look at things under 4-hour time frame. That's just a personal preference. And for my trading history, I found that like anything under 4 hour, I don't really do very well trading Ichimoku. I really prefer, if I'm going to be trading on those small of time frames, especially if we're in a range, I'm definitely, using other methods. But so again, 4 hours kind of the minimum for me. I really prefer higher time frames though, as they always take precedence over lower time frames. So whatever the 12-hour chart is doing will supersede what the 4-hour chart is telling me. That just will. So for me, I love the 12-hour, the 1 day and the 2 day for swing trades. Those 3 time frames are like, that's my bread and butter, especially the 12-hour and the 1 day. I take a lot of trades based upon those 2 time frames. And then anything higher than that, basically a 3-day chart and a weekly chart helps to give me a macro level viewpoint. And that's specifically for crypto. Crypto's not very old. When you're trading Bitcoin and Ethereum, I think looking at Bitcoin on a weekly time frame is perfectly acceptable to consider that a macro time frame. Now, if you're trading stocks or something like that, I mean, weekly time frame could still be, I would say that's more lower time frame even. For that, you could be looking at, even monthly charts, possibly even quarterly charts, depending how old or how much price action history those specific charts have. But since this is a crypto channel, we mostly talk about that. These are the different time frames that I prefer. So again, so 12-hour, 1 day, and 2 day, I absolutely love those. Use those a lot. Anything above 4 hours is okay. 6-hour and 8-hour charts, I do use those from time to time. And then again, for like macro level viewpoint, 3 day and weekly. So what are some of the shortfalls of Ichimoku? So number 1, ranges. Ranges produce a lot of false positives. So if you try to use Ichimoku when price action is ranging, like in Bitcoin, it currently is ranging. You're going to get chopped to pieces a lot of times. So you really got to be, you got to be patient and wait for, a legitimate trend reversal, depending on what time frame you're looking, obviously. But you really want to wait for the signals that I'll be discussing later on in the video and in future videos. But again, for ranges, absolutely not a good idea to use Ichimoku for. And the second thing, you're not going to ever catch a bottom or a top. You just won't. That's just not how the indicator, not how it's really designed. But the awesome thing about it is if you can even catch 70% of the trend, you're going to likely make a lot of money. And I'm about to show you a very recent example, a very relevant example to most of you watching this video. I'm going to show you the Bitcoin chart, which I've discussed a few times before. But again, you're going to see like the power of Ichimoku if you stick to the plan and you trade it properly, you can do incredibly well, and you do not need to worry about catching every bottom or every top. So the third thing, fake outs, they're going to happen. It's a part, you know, there's no indicator that exists to my knowledge that is 100% perfect. Like there are definite fake outs when it comes to Ichimoku, and a lot of those though are going to be due to ranges. So it's really important to understand when you are in ranging price action, because you're not really going to want to use Ichimoku for that, which I'll give you examples in future videos for sure. And number 4, so again, this kind of relates to number 2 and what I was discussing, but number 4, impatient traders don't ride the trend. So, you know, if you're one of those people that really like to day trade, or you got to be in and out of positions, just trying to trade, you know, every little range out forms and all that, Ichimoku might be a little bit tough for you, because it really does require patience, especially if you're trading on higher time frames. So if you're using, you know, you take a position on a 12-hour time frame or a daily time frame, you know, you realize that each candle is a day long, and trends could, you know, if you look at the stock market, you know, stuff like that. I mean, trends could exist for months or even years in that instance. But that's, you know, the thing with crypto, especially when you get into those crazy trends, you really have to be patient. And there's, you know, I think a legitimate shortfall of, it's not this, I mean, it's not the indicator's fault, it's not the system's fault, but a lot of times, you know, people just aren't patient enough to sit in a position for that long, especially when the profits get so big, which, you know, that's a different thing to discuss, you know, for a different video. Obviously, if you're happy with the amount of money that you made, or you want to secure some profit, there's never anything wrong with taking profits, ever. Don't ever let anybody tell you that either. Like, profit is profit. But one thing that can happen, again, is being impatient and not letting the system work itself out, not letting the trade play itself out to its fullest potential. And you could really take trades, or, you know, take profits too early and lose a lot of that potential upside that's there. All right, so it's time for the example. So I'm going to walk you through a chart just to show you how Ichimoku works, when you might exit, when you might enter a trade, when you might exit, and just show you a few different things to look at. And just a reminder, this is literally a beginner's video number 1. There's going to be plenty of videos following this, so we can get into the, you know, the nitty gritty about getting into trades, exiting, you know, different types of indicators that you can pair with Ichimoku to help you make better trades, all kinds of stuff. That's all coming in future videos. But I really just wanted to get your feet wet, get you exposed to how Ichimoku works, and go from there. So let's get to the chart. All right, so here is the live Bitcoin chart. So literally right now, it is June 30th. We actually just had the monthly close, the quarterly close. It's a really big day today. I haven't actually got to update Discord too much because I've been working on this video all day. But I just wanted to show you real quick before I went back in time what I meant about an indicator that's giving you future support and resistance. Like, this is phenomenal stuff right here. So I'll just give you a real quick overview of what's happening right now when it comes to Ichimoku. So there's a couple different things that I see. I don't want to get too much because I actually want to go through the full chart here just to give you a really good idea of how you can use Ichimoku, types of trades that you might have been able to take. But again, just highlighting right here. So you can see price is sitting right here, right? And you have this portion of the indicator, which is the Senkou span A, which is now on the bottom because the cloud is bearish, Senkou span B, but these are forecasted out in front of you a month ahead. So literally 30 candles ahead. That's telling you future support resistance levels. So if price does come back up to these, you're going to be ready to react and to monitor how price interacts with these specific levels. So looking at the chart right now, I can tell you one thing. So here you see how tight and again, the blue line is your Tenkan-sen, or your Tenkan. The yellow line is your Kijun. And basically you see how close together they are. And then they start to deviate really far away from each other, right? So this particular type of formation is called the C clamp. I'm going to get into that in future videos. I don't expect you to remember that right now. But essentially what that signifies is there's a big deviation from your Tenkan to your Kijun. There's a huge gap right here. And what this says is price is in disequilibrium. So price is very far away from your Kijun, and you're looking for price to eventually revert its way back up to your Kijun. So that's kind of what I'm keeping in mind right now. But there's a huge gap right here. So again, it tells you that price is in disequilibrium, and essentially you're oversold. So since price is so far away from Kijun, Tenkan is so far away from Kijun, this is kind of an indication of being oversold. So do we look for price to continue down from here? It certainly can, but I'd say it's kind of a little bit more on the unlikely side from this, from an Ichimoku perspective. You really want to see these two things, the Tenkan and the Kijun be a lot closer together. You want to see price at least come and test this. Now I do know, because of the calculations, if you look back, and I'll just show you real fast, I guess, while I'm here. So they're going to pull back from here, and you're going to go back. Oops. So 60 bars. So here's our current day today. This is 60 days ago. So we're sitting right here on this. This would be 60 days on this red candle right here. So what am I getting at? Well, you know how this is calculated, where you take your highest high and your lowest low for the past 60 days, right? Divide it by 2, and that is your Kijun. You see it's literally right in the middle of this high and this low. 50% retracement. The only way that you're going to get this Kijun to move is if you lose this higher high or this lower low. So either price drops, below this, I guess, well, now it's here. So price drops below this wick, it's gonna bring your Kijun down. If you lose this high, which guess what? So what did I say? This red candle right here is 60 candles back. And then you see I'm moving it. So 8 days from now, we're going to be at this candle, which is your current high of this price action. Okay. So in 8 days, you're going to be on this candle. On day 9, you're going to move to this green candle, which is lower than this red candle. So assuming we don't make a lower low or a higher high, or I would say a higher high, but we take out this high, this Kijun is going to remain flat. If we just remain range bound for the next 9 to 10 days, then you're going to start to see your yellow Kijun move down because you're going to lose this high, right? So your average is going to get smaller. So you're going to see this Kijun start to move down closer to where this price is. Now, a lot of things can happen in the next 9 to 10 days, but it is helpful for you to know, and again, these forecasting dots, this is like heaven. Having these your standard Ichimoku that's built into TradingView will not have these dots. This is actually a custom indicator that I have. Although I have shared in Discord, there is another indicator that also has forecasting dots, incredibly helpful. But these will show you the general direction of where your Kijun and your Tenkan are heading. So I think it's really important when it comes to trading, when it comes to monitoring price. So again, your yellow Kijun, it looks like it's going to start coming down here over the next week and a half. A lot can happen in between then. We can either make a new low, or we can, we could rock it up from here. Who knows? And take out this high, or, it's a lot of things can happen, but that's essentially what you're looking for. So when it comes to the C clamp itself, there's 1 or 2 things that is going to resolve it. Either price is going to meet the Kijun to get back into equilibrium, or the Kijun is going to meet price. It's one of those two. There aren't very many guarantees in trading, but I can guarantee you this. At some point in the future, it might be next week, it could be tomorrow, it could be 6 months from now. At some point, this will mean revert. This will touch the Kijun again. It's guaranteed to happen. So you give it long enough, it's going to happen. So that's, a lot of times too, when you get these deviations away from the Kijun, the first touch is often really respected. So, there could be a really nice short scalp here. If price comes up, mean reverts back to your Kijun-sen here, like you could get a really nice short entry. I'm not saying that that's what I'm going to do, But a lot of times, especially when you're away from it for so long, the first mean reversion is, you can get a lot of really good trades off of that sometimes. So that's just a little bit of a hint. But let's go back in time. You can see I did a few of these, try to set this up to make it a little easier for you. So hopefully I didn't confuse you with that first part. And trust me, as you get to video 2, video 3, like you're gonna really start to understand the theories and the concepts behind what I'm talking about. But I want to talk about this. So this is where I'm going to start. This is back in February of, this is what, January, February, March. This ugly, horrible coronavirus crash right here that we had back in March of 2020. The crazy thing was there was actually an entry before that. So let's walk you through that really fast. So, you have a bullish entry here, right? Price essentially breaks in the cloud. You have your bullish TK cross. So your Tenkan bullishly crosses your yellow Kijun, and price makes its way up to the top. Now, this is where things get pretty crazy, right? So price gets pretty far away from your Kijun. You get your mean reversion, and then you get some crazy stuff that happens. So first of all, if you notice here, your Chikou span, which I said earlier was very underused and very underrated tool for Ichimoku. People really ignore it. Some people don't even have it plotted on there. Some people don't even have this, plotted on Ichimoku, which I think is kind of crazy. But what happens here, remember earlier in the chart, you said you really want, earlier in the video, Chikou span either has to be above price or below price, and that kind of gives you an idea. Like, it's one of the things that you're going to look at when you're looking at taking a trade. So when Chikou span breaks below price, that tells me right away that I shouldn't be looking for longs, right? So to give you an idea, here on this candle, right? So let's say it's this green candle right here where my mouse is at. 30 periods back, this is where your Chikou span was. So what did it tell you? This is not a good long area, even though cloud is, well, technically cloud is bullish. And, you have a bullish TK cross setup, right? But it's not a great long because Chikou span is actually breaking below price. So you see it's underneath price. So it broke through right here, and now it's sitting underneath price. And this is telling you this right here on this candle. So did you get a long out of it? I mean, maybe, a few $100 or whatever. But this was your early warning saying, hey, as long as Chikou span's below price, and you can see how extended price gets up here, like this isn't a really good area to long, no matter how it looks, right? And then what happens? Well, you get this candle, and then this candle right here was like, oh my goodness, what just happened, right? Now you technically don't have your bearish TK cross until the following candle, which is right here. So on March 9th, this is where you get your full on short signal, price is below cloud. I mean, obviously right here, you could have taken a short if you really wanted to. You probably, this is like just by looking at the Chikou span here, and you can see even on this little rise up, you see how this price action right here that I'm circling shifts back here. So this is how the Chikou span looks, and you got right up to underneath price before a nasty rejection, right? So Chikou span is literally helping to show you support and resistance as well, which is crazy, right? So anyway, back to this particular setup. On this candle right here, you get your confirmation bearish TK cross, and look what happens. 2 days later, so 3 days later, wow. Let's measure that just so you can see. So let's say you entered here. You were really conservative with your short. You entered at the close of this candle, and look at this. Let me be real precise here. Can't really see it. Hold on one second. There you go. 52.9, almost 53% drop 3 days after it gives you that short. So that is incredibly, like this, like people were really unprepared for this. But just looking at, if you were paying attention to the Chikou span, which is why I say like it's incredibly underrated. A lot of people don't talk about it, but it really gave you a really nice confirmation even prior to getting this. This is like extra confirmation. You have your bearish TK cross, you close below cloud, Chikou spans below price. This is like, oh my goodness, this is like really bearish. And I mean, you know, you're not going to get a 53% move to the downside every single time that happens, but that gives you an idea saying, hey, like this was your early warning signal. So this is like really, really important stuff. So moving on to the next example, coronavirus crash and your crazy recovery that we all know about. But going back to you're going back to here, right? So this is kind of this piece of price action here. Obviously, you're like way off the lows at this point. And this is kind of what I talk about mean reversion, right? So here is a really good example. It's kind of hard to see. I'm going to delete this for a second. But you basically get your price. You're pushing right back up to where your Kijun is. Now you don't get quite up to it. A little bit of a retracement back to your Tenkan, and then you get your full on. I mean, this is like mean reversion. Now price is happy. Price is where it's supposed to be. Put this back on, and then you start skipping ahead. So now you're looking for, you know, another potential entry that could happen here. So what happens around here is price actually breaks above cloud, right? So price breaks above cloud. So where's your Chikou span? Well, if you look at the first time that it broke above, which is technically right here, and I'm using this green candle because it actually closed above cloud. Go back to around where your Chikou span is, which is literally right on the Kijun, right? Excuse me. So you're right at your Kijun here. So this could have been like, you know, you could have taken even another long trade. Obviously, like, you know, everybody traded this differently. People were probably still really terrified. You know, I don't know, like from trading this myself, I know a lot of market sentiment, myself included, I'm not gonna lie. It was terrifying. You know, this is coronavirus going on. You thought the world was ending. You got a really big bounce off of the lows, and people were wondering, like, is this, you know, when is this gonna roll back over? Is it going to? You know, it was like this. The world's going crazy right now. So, you know, I think a lot of people got thrown off by this just crazy, you know, crazy move up. But when it comes to Ichimoku again, stick to your rules. You know, get your trade entry. So here could have been a trade entry, didn't really end up working out. Chikou span was basically right at Kijun here. It wasn't super clear about, you know, it wasn't just, it was kind of like, you know, you could have taken this and you know, maybe you got stopped out, maybe you didn't take it because you don't have like a very clear, you know, breakout signal, I guess you could say. But here is an absolute clear breakout signal right here a few days later. So if you move this forward to this candle, right, you can see this literally closed way above cloud. There's no two ways about it. This is very bullish. Let's go back to see where your Chikou span was, and your Chikou span was right here. So literally big close above, Chikou span clearly above Kijun, Tenkan, price. It's out in the open. It's got room to run, right? And then, so here's your trade entry. Really nice move to the upside. So now we're kind of onto this, you know, this, we kind of go in the sideways range. And here is a really good thing to point out when it comes to using Ichimoku. When Chikou span starts getting inside a price, remember I said like this is not a place where you want to be taking a new trade. Obviously, if you're still in your long here, you're probably still chilling in it because you haven't even broken your Kijun or anything yet until about here. But you know, when you see your Chikou span get into price like this is very much a range. This is not something that you really want to use to be trading until you kind of get to this section, right? So again, you're still in your long maybe. Who knows how you managed this? Maybe you stopped out here. You got a bearish TK cross right here. You know, you'd probably be out of your trade, but still, it's an incredible, you know, just to give you an idea. You entered right here, which is the close to, you know, where we, you know, mean reverted here or whatnot. I mean, that's 23.5%, almost 1,800 bucks. That's a very nice trade. And then here come, you know, we get into this next section of the chart. So again, 30 bars, you're kind of looking at this general section. What do you see that happen? So you get your bearish TK cross, but price, you know, you can kind of go back here. Maybe, you know, maybe we can just take a quick look. Bearish TK cross, let me see. Yeah, well, you kind of had a short signal here. You had a short signal here if you really wanted to take it. You have your bearish TK cross, your Chikou span was below price, but you can see like price is getting so, because this is pushback 30 days, you know that these candles have happened already. So yes, it's well below price, but you can see like it's probably going to move into price, if that makes sense. Like it's going to continue to range. Either way though, I mean, you could have taken this little short, you still would have made, you know, you still could have done okay depending on when you closed it. Obviously, if you held it, you wouldn't have done well. But you know, there could have been a short entry here. That's, I don't know if I would have bothered with this, to be honest. Like when you get this close to cloud, it's best. I mean, you could, if you really wanted to, take this, then you could, but I would prefer to wait until price actually closed inside a cloud, because that gives me, you know, that gives you a much better edge, I guess you could say. And like to go over very quickly, because I think this is really important. So when you get a signal like this, so this is a bearish TK cross, but it's above cloud, right? This is a weak signal. So this is not, you know, is it playable? Could you short from here? Sure. But it's definitely a weaker signal. If you get a candle close inside a cloud, so if price enters cloud, or you have a bearish TK cross that's inside of cloud, that's, I would say, a more, you know, that's a stronger signal, but it's still, I'd say it's more neutral. I would say neutral, but it's like it's a stronger signal, but still like not that great of a signal, except for a particular type of trade, which I'll talk about in future video. The really strong signal that you want to see is if you're going to have a bearish TK cross is when price is below cloud. That's when it's like, that's when it's a very, very strong signal. Now, so again, not to confuse you, but this bearish TK cross was a weak signal, didn't really play out, could have played out, but again, weak signal, not really the ones that you want to look for when you know, especially when you have a crazy trend like this, right? So anyway, back up to here. This is where things get even crazier. You know, so you have your bearish TK cross, which turns into a bullish TK cross above cloud. Very bullish signal, by the way, which happens right here on this candle. So this is a, you know, you're long in this. When you get this kind of opportunity, you're taking the long, and really nice move to the upside. All right, so moving on. Now we're going to talk about this particular section. So what's really interesting to me about this is your bullishly cross. So your blue Tenkan is above your yellow Kijun. You're above cloud. By all means, this is bullish, right? But this happens. So on this candle, this red candle, before you had this bigger move that actually like brought you back inside a cloud, on this candle, there was a signal that happened that, again, I think, again, it's pretty underrated. You go back 30 candles, and what's your Chikou span doing? It's actually moving through price. So you were above price, right? But you actually move further back. Actually, even 2 candles back before that. But again, Chikou span's above price. Totally fine. You get inside of price. And all of a sudden, like, this is a forewarning, right? Telling you that there's, you know, there's a change of behavior happening. Essentially, Chikou span's breaking inside of price when it was above price this entire time. Chikou span is breaking into price, and now it's below price, all within these couple this set of candles right here. And what happened on the 31st candle? You had this big breakdown. So this was like a forewarning telling you, hey, like this is, you know, we're Chikou span's inside of price or below price. We got, you know, we could have some issues. Just pay attention. Sure enough, next day, big move to the downside. You close inside a cloud, and you just spend the next several, you know, what is this, a month or so, chopping around inside a cloud. So now things are more neutral for sure. But this was a really nice warning here. There was nothing here on this chart at all telling you to short this level according to Ichimoku. There's nothing else that's telling you to short this with the exception of the Chikou span doing what it did. So that's that. I thought that was really important to show you another example of how awesome Chikou span can be. Let me try to give the best resolution as I can here. All right. So this is the trade that I will always remember this trade no matter what happens, because I took it. I went like, I did very, very well in this trade. I will never forget this. So essentially what happened was, again, back inside a cloud, things get more neutral for me. It's like, okay, now I got to be cognizant of, you know, does price end up breaking below cloud? You have a bearish TK cross inside a cloud. So remember, when you have a bearish TK cross above cloud, like we had back here, right here, actually, it was a weak signal and you got a weak result out of it, right? So I'm talking about here. You had a bearish TK cross above cloud, so it's a weak signal. Now you have a bearish TK cross inside a cloud, so it's a bit stronger of a signal. Still not like the strongest signal. It's not below cloud, but it did happen inside a cloud. Now what happened? Well, you got to move to the opposite end. And then we continue to chop around until this happened. So again, bearish TK cross inside a cloud, moved to the opposite edge of the cloud, chopped around for a bit more, and then we broke back above cloud. Obviously, we're still bearish as far as your TK cross goes, but price broke back outside of cloud, heads toward Kijun. This is your first indication right here. Your first indication telling you that we are potentially ready for a breakout. So this 30 days that I'm measuring here is on this, it's actually on this particular candle that it opened and closed above cloud. If you go back 30 days to look at what your Chikou span was doing, guess what? It broke above, it's not in the cloud, which by the way, look at the Chikou span here, literally using cloud as support. So this is like phenomenal, right? It's literally another indication you're telling you that this is support level. So, but back to this example, Chikou span is above cloud, it's above your Tenkan and your Kijun, right? Clear skies above. There's nothing here. So this is like, oh man, like this is getting really interesting. Okay. So that was on this particular candle right here. Again, you closed outside of cloud, you're still below Kijun, but your Chikou span is saying, hey, like there's nothing above us. So there's a pretty good opportunity. Like, there's a pretty good chance that price is going to move higher. And what ends up happening? Well, you do get your breakout. You know, this is already a breakout technically, but now you're above Kijun. Price continues to move up, go sideways for a little bit. And this is the trigger of all triggers right here. This is going to have its own video dedicated to it, but just give you a quick idea. You got your bullish TK recross above cloud, massive buying opportunity. So if you're not long already from here, from any of this, that's telling you, you know, and like I'd say, this is not that it's more risky long, but this could be classified as an early long. This certainly is your moment. One of the very rare opportunities that you're going to get using Ichimoku. It's just an incredibly rare opportunity, but here's your entry. And this is what happens. So your entry is way back here. And look. So you're along from 11,300. And this is what I mean by people getting impatient and not wanting to ride the trend, right? People not wanting to ride the trend. But 11,300 all the way up to your first, you know, obviously we had some, you know, we had some pullbacks along the way, but these look so small, don't they? They look pretty small now. But, you know, we basically got up to almost 20,000. Basically front ran 20,000. There was a bit of a sell-off. You know, we got your first sell-off here. Came back right about to 20,000. Another sell-off before we got the breakout, which is like a phenomenal. I mean, this is a different video. Talk about that. But nonetheless, this, you know, just another breakout, new all-time highs. Everybody's really excited. But with Ichimoku, you're not, like, you're still in this trade. And really, like, where you would put your stop loss in an instance like this is typically the best place that I like to put my stop loss is behind Kijun. So I like to, there's other methods that I'll discuss in future videos, but I really like to hide my stops behind Kijun. And the thing is, like those stops are really wide for a lot of people. A lot of people don't want to do that. You know, they don't want to, place their stops that deep because they're worried that they're going to, you hit 20,000, and if it comes back to, 15,000, you lost all that money. And it's just really difficult for people to want to, essentially like trust the system and let the system play out, which I understand. But anyway, you're still in this trade. And then comes these two things, which I'll talk about in a second. But again, all the way up to 42,000. So keep in mind, your entry is 11,300, price at $42,000. Here's where it gets even crazier. So when price is far away from Kijun, and you start to see this deviation. So remember, I talked about this earlier. It's called the C clamp, right? Like you see this deviation of your Tenkan away from your Kijun. Price is way far away. A lot of times this will tell you you're overbought now. So things are like really frothy up here. Things are overbought, and you look for a mean reversion. Guess what? You get your mean reversion from 42,000 all the way down to your Kijun. So you get two opportunities, literally Kijun test, really nice bounce off, honestly. I mean, you're talking 29,000 to 30, almost $35,000. Like that's a nice bounce already. And then you get another second opportunity, and then this happens. So you're literally coming from your Kijun here at $30,000 all the way up to 58,500 before, guess what? You get another mean reversion, another buying opportunity, another, if you weren't long here, if you weren't long back here, this is another long opportunity or an opportunity to compound. So if you, again, if you got long at 11,300, you could have added to your positions here. Excuse me while my timer goes off. But you could have added to your positions here, and you could have compounded even more here, which brings you up to your current all-time high, $65,000. Now, where do you get out? See, that's the thing, right? So now you got to decide for yourself. If you're long from way back there, where's a good place to take profits? So, this is one of those, there's no perfect answer because everybody's going to trade this completely differently. This is all very much hindsight now looking at this, but I'm trying to give you like the best, like the most authentic view that I can possibly give you looking at a hindsight chart. But really, I think one critical place, so there's an obvious place, and then there's an interesting place, like where I would say like an interesting place is really here, where you got your very clean wick through. So again, if you were using your Kijun as a stop and you were just literally moving your stop loss up, so obviously like you can see they get broke through a little bit. You're not going to put your stop literally right at Kijun. Here you would have very likely got stopped out though. Like if you're trading a stop loss behind Kijun, you wouldn't have given it that much room. So maybe you're out at 54,000. I don't know. So like another thing that I was talking about right here is that's a bit of a change of behavior is you're not getting quick movements like you did here, right? So strong move off, another test, really strong move off, and then you got your, another leg up. Here, literally a pin touch, and then boom, another all-time high. Here, you literally wicked right through everything, and you hung around here. So this is a change of behavior, telling you, like this is not a strong reaction like we've seen the previous 3 instances that we've got. Something could be like, this could be it. Like this, we could be changing trend. And then this certainly does. When you get a closure inside a cloud, it's done. Like you're like, okay, like probably, like when you start to see this types of things, this hasn't happened the entire run up. This is telling you, hey, like we've got some different circumstances now. And then you have a bearish TK cross above cloud, which again is a weak signal. But considering what's happened before, like these are all telling you, hey, like you got your first bearish TK cross since 11,300, you're done here. This is like, you're absolutely done. So if you're not done here, you're probably done here. If you're not done here, you're definitely done here. Because like if you're looking at this, well, we're still bullishly crossed. I wouldn't really probably look at it that way. But this is your confirmation saying, hey, like you're out. And the simple thing is you have a bearish TK cross. If this managed to recross bullishly, you could have got right back in. So I would say like you wouldn't have missed a whole bunch more upside. But again, looking at this in hindsight, this is telling you to get out of your trade. And then obviously your Chikou span, was below price. It's another thing. Again, you know, I'm just curious. When did you first break back in? It was even here, but it popped back out here, and you're permanently, well, you got back up here a little bit. I'm curious where this was. Here. So if you were kind of following Chikou span, which again, like this was kind of the same thing here. So you really, you know, you're starting to get a little picky. So this red candle, yeah, I mean, either way, like somewhere in this range, you're exiting your trade, right? There's multiple things depending on what you wanted to use as your validation that you would probably have been out of this trade. Now comes the crazy part. Bearish TK cross. Price closes inside a cloud. So this is like, could take a short, but this is a weak signal again, and it didn't really, you know, you got another kind of fake out to the upside here. So this is, you know, again, this is a weak signal, but it's still a signal. This is a strong signal though. This is like a stronger signal for sure, saying, oh my, like we literally, you know, swift move to the downside. We closed in here. And I talked about this live in Discord actually. My issue with taking this particular trade was the fact that it closed so far inside a cloud. So your risk reward, I mean, you're looking for the opposite edge, which actually came. But it was kind of tough because you should take the short, but you're down, you know, you're kind of risking a lot to figure out if you're right on this trade or not. But at the end of the day, like this is absolutely an entry. You got your target, and then this happened. This is really bad. And you had a bearish close, or you had a closure below cloud. So not only are you bearish TK cross, price broke below cloud, and then game over. So this, you know, even just taking this short, geez, like even just taking this short right here, 30% move to the downside literally the next day. So that's, again, this is giving you, there was multiple bearish signals. So this was telling you to bearish or at least be neutral and probably be out of your long. At least if you didn't exit on any of these other signals here, this is telling you, hey, like it's, you know, the trend's over for now. Look for a new entry, essentially at the minimum, right? This telling you you're short, got your target, but then this happens the next day. So again, you know, you're short, depends how much profit you would have taken off here. But this candle told you, wow, this is very, very bearish. And sure enough, the next day you got your flush. So that literally happened, and then now we've been ranging. So that, I walked you through kind of the beginning, right? I kind of went backwards. So we started here just to show you the forecasting and how that works and how you're able to see future support and resistance. And then I took you through several examples and walked you through how you could use those elements that we talked about in the beginning to trade Ichimoku, to give you an idea of how you actually look at these different elements on a chart and put the pieces together. So what I'm going to do for video number 2 is we're really going to focus on entries and exits. So so now that you understand, and you're probably going to have to watch this video a couple of times, but now that you understand the different pieces of Ichimoku, how they're calculated, kind of like how how the system works with each other to a degree, the next video, we're going to put that to work, and we're going to actually look for entries and exits. And we're going to really spend a lot of time talking about entries and exits and managing your trade. So we did a little bit of that in this video here. But again, entries and exits are going to be the focus of video number 2, and kind of talking more about risk management. So that is it. So I hope that you enjoyed this video. I hope that you got something out of it. And definitely come hang out in Discord. If you're not in Discord yet, there's quite a few people in there, and we have a really awesome trading community there. We have a lot of people using trading bots, which is a whole different series that I discussed prior to this. But a lot of my content going forward is going to be very much technical analysis focused. So again, this was the first video of Ichimoku. We have definitely at least a few more beginners series Ichimoku videos to get through before I start to talk about other content, other trading styles. But anyway, I hope you enjoyed the video. Trade safe out there. Have a good one.